What's up, guys? Welcome to the Crypto Savvy channel. I'm Craig, and we're going to be going over the charts as usual. I'm going to make this as quick as possible. Happy Friday. I hope everyone has a great weekend. Make sure you scroll down, smash that thumbs up, leave your comments. Let me know what you think of the video. Also, make sure you subscribe if you haven't already. It does really help out if you do just take 1 second out of your life and hit that thumbs up. So anyways, let's get into it. So we're also going to be taking a look at the DXY, DAO, Bitcoin. I'm going to show you, like I said, I'm going to try to make this as quick as possible. I'm going to show you the areas we need to be watching and what I'm seeing. So definitely stick around for the whole video. We're also going to take a look at gold, silver, oil, and Tesla and see what's going on with that, because my charts for those are about a year old. Well, gold and silver about a year and a half old, and they're playing out beautifully. And silver, or I'm sorry, Tesla is about 5 or 6 months old, playing out beautifully. And of course, oil, same, about 5 or 6 months old. So anyways, let's see what's going on. So as we've been talking about this top trend line here, a break of this 34.25 then will tell me that we possibly could go higher in Bitcoin. But as long as we remain below this trend line, I'm still bearish on the Dow and bearish on Bitcoin. My next target for the Dow, as long as this is not broken, I repeat, as long as this isn't broken, that's called a confirmation point, right? So if it's broken, then that invalidates my theory of the 30,900, which I think it's going to go much lower than that, but we'll talk about that in a later video. DXY. So this is the chart everybody wants you to see, right? Looks bearish, looks really bearish. But if you guys have been watching, I showed you guys this 3 white soldiers here, which is a bullish pattern. It is a bullish reversal, right? It's on the daily, so it should be pretty strong. Of course, you get a little pullback, right? Right now, we're between the EMAs here. Now, our next point of resistance is 104. If we break 104 and hold support on that, our next point of resistance is about 104.8. Once we break above that and get support, that's super bullish for the DXY. Now, if you look at the DXY, this is simply a pullback, guys. I think the DXY is going much, much higher. I've been talking about it for a long time. I have not changed my views at all. Now let's take a look at our monthly. If you look at this white trend line, we made lower highs in the price action, higher highs in the RSI. What is the trend? The trend is down. What is this? Hidden bearish divergence. That is a continuation of the trend when it's hidden, right? So trend is down. It's hidden bearish. That's a continuation of the bearish trend. Now, what will invalidate this on the monthly? Well, we would need a close above this trend line, which is around 22.9. If we close this monthly, which we still have, what, 2.5 weeks before it closes, right? If we close the monthly above there, then we can start to get bullish. And then we would start to look for 25.3 for the 13 EMA and then 27.4. Now, we have invalidation points for my .com bubble too, which we have not hit, and that's 25.8, which is the 55 EMA. You'll notice I always use the same EMAs. I don't come up with different indicators constantly to, push you towards my bias. I use the same indicators, simple indicators, the EMAs, because they work awesome on crypto. And then the RSI. I'm not, getting into the MACD, getting into this, or pulling this new one up that nobody's seen because it matches a bias, right? You'll see a lot of that on YouTube. Just be cautious about that. So anyways, let's get into the weekly. So I posted this chart, I posted it like a week ago, showing this hidden bearish divergence. You can see what happened up here after we got this lower high in the price action and then a higher high in the RSI, hidden bearish divergence. You can see what happened after. And as you can see, there's 3 in a row right here. And this is a pretty big sign of a reversal, right? Now, people were calling this a trend line. This wasn't a trend line. This is showing you divergence, right? That's all that's there for. Now, if you want to make a trend line down here on the RSI, it shows it could have one more push up, right? So maybe we come down further, get another push to a higher high on here, which would be, you would probably get a lower high here, a higher high here, if that was to happen. And that would just be bearish divergence, right, for the reversal. But I do think we've reversed here. It does look like it. If you look at even this high, where the yellow line is, to this high, that's a lower high in the weekly. And a higher high here. That's pretty big hidden bearish divergence, guys. It's undeniable. Every time we've hit these zones, you can see what happened. And I talked about this being a lot like 48K. It is a lot. Even the sentiment, the bulls getting super, pushy about the bottom is in. We heard all that stuff right back here. The same sentiment, the same everything. Now, I'm not saying it has to be the same, but I'm saying everything is sure looking a lot like 48K right here. And there is a lot of room for downside on this RSI. And I've talked about it before. When the RSI moves up like this and makes a higher high, but the price action doesn't, that's the RSI resetting for more downside, right? If you guys are interested in trading, I have a link down below. Definitely check out Prime XBT. You can use my promo code SAVVY50. That'll get you up to a $7,000 bonus to use towards your margin. SAVVY25 will get you 25% off your fees. I'll also leave a tutorial at the end of the video up top, along with my December 2nd, 2021 video where I talked about all this happening. I even talked about how people would feel about, hitting a low and then it gets a bounce and everyone gets bullish again. And then it gets another low. They wish they would have sold up here, but then it bounces again. And then they get all excited because they think the bottom's in, and then it makes a new lower low and they wish they would have sold here. And each time just making a lower low, which we have done again from back here, right? This is my 4-hour chart or 4-day chart, right? Here's the 55 EMA. Like I said, I don't like to use different indicators all the time. If you're doing that, you're going to confuse yourself. I'm not saying to use the exact indicators or everything I use. I'm saying pick a few and get good at them. Because if you just keep changing indicators, chances are you're just going to confuse yourself and you're not going to get anywhere. So pick a few, get used to them. If you don't like them, then switch to a different one. But putting a bunch of indicators on your screen, making your screens messy, will make messy trades, right? So anyways, let's see. Watch this 55 EMA here, right? We got a little above it here, got rejected, came down, got a little above it here, 48K. Remember, now everyone was screaming the bottom was in, to the moon. That was it. Bull market on, and huge dump here. There's some more things I want to look at. We'll measure these out here, but let's but just look here too. You can put this trend line right here. It's not technically a trend line, just showing you the direction of the trend. We made a higher high in the price or RSI, lower high in the RSI or price action. And you can see what's happening right now. Where are we on here? Now we are below our 55 EMA. So in another 4-day open and close below this, pretty damn bearish. Where's the support on the 4-day? About 21,000 for the 13 EMA. If we go down further, 20,250-ish on the 21 EMA, right? But like I said, you can see what happened up here. Once we broke that 20 or 55 EMA here, it never really came back. That's on a 4-day, right? So we have 3 days left. So this candle can still go up above it right now, and it'd still be within this candle. But a 4-day close above this 55 EMA, so we have 3 days and 7 hours left. So would that be next Tuesday or something? I'll be keeping up on it, but if we close below that, guys, that's pretty much a wrap in my opinion. Here's another thing. So let me show you guys this real quick. People are calling this trend line just a fake, means nothing trend line, right? Well, I'm going to show you where I got that. You can see here, I went off of these bottom trend line or bottom wicks, right? Drew this trend line across. That was way back before this broke. We also made a measured move out of that. Show you what that was. Our measured move was, I don't know what this line is. What is this line? Oh, this is for a target down here. But our measured move, and we'll go over this. This is the daily, then we'll get into the 4-hour, so on and so forth. The measured move of that got us perfectly to here, right? We called that way before it happened by using these 2 wicks. We drew a trend line, we cloned it, we put it up to these 2 wicks, right? And boom, this is where we got our 48K bull trap, right? Wicked above. Pretty much the same thing we're doing right here, right? We went off of these 2 wicks on the bottom, cloned this line, put it up to the top wick. We rallied above it, bull trap, and now we are back below it. Now, what happened? How do you invalidate all this and say that this wasn't valid? Well, first of all, to say it was valid, you can see what happened once it did break, right? That 22.6, we had that there forever. Now we would have to get back above this 22.6. So 22.6 is major resistance as of right now. If we get back above that and hold, then we could be going up to that 25.8 range, which is our invalidation point, right? We get above that, open and close some dailies. I'd say open and close a weekly because that's where the weekly 55 EMA is. Then we can look at the bullish target. If this breaks, we open and close a weekly above it, then I'd look for 31.5. But unless we get back above this 22.6 now, we remain bearish. And I have targets down here we'll look at in the 4 hour. But first, I want to look at the daily, right? So the daily, the massive support is down here around the 17.6 area, which I do expect if we get down there to get a big pump up, rally, whatever you want to call it, just for more downside, right? That would get us below these EMAs. I think we'd come back up, retest these EMAs, possibly even retest this top trend line here before coming down. Now, as you guys know, I think the false bottom is sometime in February or March. It's looking more like March, but we still have a lot of time in February. But either way, we have a lot of time to get down. So it's not going to be one straight candle all the way down. We've talked about this for well over a year, about looking for a false bottom and looking for it somewhere around 9,500. This is just what I have drawn off of these wicks here. Obviously, this doesn't have to play out perfectly, but that would get us there sometime in March, right? To get down to this level if we break these support levels. Where's another major area we got to watch is this trend line here. The dotted trend line, you can see the bottom here. This looks like a wedge where we broke out here, which also broke out in the weekly, and we'll go over that. This video may be a little bit longer than I want, but I'm trying to get all the information out without leaving things out for you guys to watch for. We'll get into the 4 hour too, but yeah, let's just get into it. Here's the 4 hour. All right, and I'm going to show you where I get these targets. First one being 21.5, second one being 19.9. And then 19, right? So looking at this blue trend line up top, looking at this as a rising wedge, right, that we broke out of. If we take the measured move of that, bring it to where we broke down, that gets us at 21.5, 21.6 range. Let's say 21.6. So that'd be a good area I'd be looking for a bounce. Also, we'll take a look at some other things, the EMAs in the 4 hour here also. But now let's take a look at looking at this, this blue line on the bottom, blue line on top, looking at that as a rising broadening wedge. Let's take a measured move of that. What would that get us? Same thing, right around that. So let's look for 20,300 to 20,600 would be the measured move of both of those. Then if we look at this whole thing as a rising broadening wedge here, right? We bring that down. That gets us to that 19. So these are areas I'm looking for a bounce. Now, does that mean that it's going to bounce and that was it? Bull market on? No, not in my opinion. Unless we break back above this trend line and hold support above this 22.6, 22.7 range, right? In the 4 hour, it actually looks more like 20. Yeah, let's just say 22.6. Now, another thing in the 4 hour, if you look, we're back below the 200 EMA. Now, does that mean we have to hold down here? No, we could close back above. But if we start opening and closing below that 200, I think we get down to these levels before coming back up to retest it. Also, I had been showing you guys this short signal we had using my EMA strategy that we, a guy in our group made an indicator for it, which is totally free. I don't believe anybody that has a successful way to make money will have to sell it to you, because they would just use it to make money, right? And then let other people know, and hopefully other people get it. Will it get you exact tops and exact bottoms? No, but it's pretty damn accurate. It's more accurate than a lot of these ones I see people selling, and they're all confusing with dots and lines and blue waves and red waves and blah, blah, blah. Keep it simple, right? So this is just the EMA strategy, I made a video on it on my page. Go to my YouTube page in the tutorials and you'll find it. It just talks about how the 8, the 13, and the 21 EMA cross the 55, and then the next candle opens and closes below the 13 or the 8. That would be a short, opposite way for a long, right? It signaled a short here the other day. I showed you guys that. And if you want to go get the indicator, just go up into the indicator section and you'll find it. It's type in EMA candle close strategy, 8 close, 13 close, 21 close, 55 close. It's all right there. Like I said, a guy in our group made this. You can join our Discord down below too. I will start to get back into that a little. As you guys know, I've been in the process of building a home and a lot of things happening right now. So I haven't been real active on social media, but as the house, comes along and get to different stages where I don't have to be there as much. It is a custom home, so we have to go and make decisions every day on where to put what and what to do. It's not like we just picked a house and said, yeah, we'll take that trim package and it's all done. It's a lot different than that. So anyways, right now we are below the 200 EMA. And if we look at back here last time, I have these little arrows in here, shows you when we crossed the 200 EMA, right? And then we had a little bottom here. Same thing here. Now, a lot of people are going to say it's oversold. Well, you can see what happened here. Let's zoom out here. Right here, right? This was this low right here. That's this peak right here. Looks oversold, right? We got to wick up. We got to wick up past that 55, but it came right back down. You can see what happened, and look how much lower it went, and how big of a drop was that? That was from 21.5 all the way down to 15.5, so $10,000, right? You can see where we're at now. Looks like it's oversold, right? But I would not count on that. We're still below the 200 EMA. It's playing with it. Like I said, if we start opening and closing back above that, then maybe, get another push up. Might even get a wick all the way up to this 23,000 range, breaking that 55 EMA, just like we did back here. Does it have to play out the same? No. Another way to look at this, when it does tell you to short, right? As long as you stay below the 8 EMA, that's pretty big move to the downside. And then once you break it, then you can see we made one more low after that. Nevertheless, guys, if just check out this indicator or any other indicator you want and watch it and see how it reacts and see how it works. This one calls great signals. You can use it in all time frames. Actually, daily, if you're using spot, is probably the safest way to use it. There it is. Safest way to use it, if you just bought when it said long and sell when it says short. You would have longed back here. You would have sold up here. You would have longed back here. You would have sold up here. You would have sold. Oh, no. You would have longed again right here. You would have sold up here. If you just back test it yourself, it's not that hard to do. Put it on there. Look at it. Look how it worked in the past. It's much more accurate than a lot of these paid indicators. Don't get all sucked into that hype, guys. All right, let's take a look at the weekly here. So the weekly here, we've talked about these measured moves. I told you look for a false bottom. We were looking for a bounce around the 14.9. We didn't quite get there, but nevertheless, here's our invalidation point, that 25.8 range. If we open and close the weekly above that, then the bottom could be in. But until then, I still think we are going to see lower lows. At least one more low, which I believe there's going to be a false bottom first. We're going to get another rally, towards maybe sometime in, let's look back here. The false bottom usually occurs around March or so. That's where I'm looking for the false bottom. Even if it will be the bottom in March, it's a good time to buy just in case, maybe, or long, or put your stops just above. So if it does go to the lower low, you get stopped out, right? So either way, I think we're going to have another low to buy in. I do think it's going to be the false bottom, and then we have a true bottom in September, October. I still stick to that. I showed you guys here on the weekly EMA on the Amazon compared to Bitcoin chart that we could get a big breakout rally and everyone gets super bullish like they did right here, and that be the false bottom. So if you want to look at it that way, then maybe that was the false bottom, but nevertheless, we get a new lower low. Either way, I think we get a chance to get down lower to get in some longs or whatever. Either way, right? I still think the true bottom will probably be towards the end of this year. But as I've always said, down here would be a good time to buy, maybe take profits on the way up, right? And sometime in March when we do hit the bottom, could fall all the way into April. We'll see what happens there. But nevertheless, there's always rallies, right? I showed you guys this on December 2nd, 2021, how bubbles pop. I do believe this is a bubble pop pattern. This was a 95% correction, which I think we are going to get here. Does it have to? No, but chances are we do have at least one more lower low. This little rally right here was 70%, right? And that was before the false bottom. So far, this was only 57%. Again, they don't have to be exact. I'm just showing you how emotion will get people sucked into bull traps. There's another bubble I want to look at before we go into gold, silver, oil, and Tesla, right? You can see this. This is the Nintendo bubble pop. It's been over 15 years and still never broke its all-time high, right? But you can see this rally here. It even broke the 55 on this, but you can see this rally here. I'm sure everyone got super bullish. That was the bottom was in for sure. No doubt about it. Broke the old high. Just like the things going on in Bitcoin, right? Guys, analyze these charts. Look at how emotion and things happen. And yes, you can compare two different assets on charts. It doesn't matter. It's still based on human emotion, greed, fear. It's all based on the same stuff. So you can see what happened here. Big rally and then turn around and get rejected. Now look at this rally we got here. Same thing. We got a big rally. Sure looks like we're getting rejected. Now, could it go higher? Of course. But I still don't believe the bottom's in here because this bubble pop pattern is not played out. If it was to play out like this one, right? That was a 88%. And that would get us down to about 7,500. Again, these aren't exact. These are showing you what I'm looking for, right? Let's take a look at Sony. Sony, same thing. You can see this huge rally ahead right here. Let me move it over so you can see. Huge rally, right? Even had one up here. Huge rally right around in the same areas, and then only to come down and make another lower low. And this one even had a second big rally before making a lower low. So that's what I'm talking about, guys. Be careful. You know, charts are based on human emotion, right? Fear and greed. I mean, that's the main two things, right? So every little pump they can get people to FOMO in, that's exit liquidity. These markets are a game, folks. All right. Gold, ABC. Been looking for this since way back here in 2020. We made this chart. Still looking for around 1559 for the bottom for gold. If it's going to be bullish at that point. If we break below that, my next target's around 1396, somewhere in that area. Maybe let's just say 14. Right around 14,000, 1,400 breaks. I have much lower lows, right? But first off, let's see if we get that bounce at 1559, which I do think we'll get down here. We'll see what happens. I know a lot of people are bullish on silver or gold. Silver, my target still remains the same since way back here in 2021 at 15.6. If that breaks, $7. Nothing's changed in my opinion there. Oil, as you guys know, I'm looking for around the 62.54 in oil. If things turn bullish around that time, then that could be the bottom for all markets, right? Everything meets up around here and then shoots up. But if that breaks, I'm still looking for around 27. Did I just say that I'm guaranteeing there's $27 oil coming? No, I said if the 62.54 breaks, this is what I'm looking for. But I'm still looking for 62.54 area. Tesla, remember this chart, guys. This is a very old chart. I drew this showing you basically same thing, bubble pop pattern, right? We talked about if these are my Fibonacci retracements. It's actually an extension from this low. But I told you if the 235 broke, look for 211. If 211 broke, look for 183. If 183 broke, look for 151. If 151 broke, look for 106. If 106 broke, look for 49. Now, we got our bounce right here. It went a little lower than 106. But guys, you can go back and check. This chart is actually from back before this whole trend broke here. Back in September of 22, I made this chart. Now look what we're doing. We got rejected again off of the fib up here. 211. That was an old fib. We got rejected. Now if we break this 183, what's next? 151. Then what's next? 106. This is where I'm looking to buy Tesla. Probably towards the end of this year. We'll see if it happens. Either way, it doesn't really bother me. But unless we get back above this trend line here, which is going to be around 228, let's just say 230. Get above that 230, then maybe this whole dump, whatever you want to call it, this whole bear market is over. But I still think we're going to be able to buy down in the $50 range. I'd actually start buying probably at a break of 60, just start dollar cost averaging in. Another thing I wanted to point out here, let's bring this trend line down here. So this high to this high, lower highs, higher highs, hidden bearish divergence. You guessed it, guys. All these charts are still showing more downside, guys. Be careful. I could be wrong. None of this is financial advice, but you need to look at both avenues. And if this does happen and we go till the middle or end of this year before hitting our lows, it could be a long, long time before you see new all-time highs in any of these assets, right? Just take a look back at the Great Depression. Not saying that that's going to happen, but I'm saying it's a good possibility. Look around the world today, guys. Things are just crazy. It's almost like watching a cartoon play out, right? Just be careful out there. I do not think the bottom's in. I've stated that for a very long time. I've told you since last year, well, since 2021, that I don't think the bottom will be in until the middle or end of 2023. I've said it since way back then, guys. Anyways, sorry the video went a lot longer than I was meant to, but have a great weekend. Be careful out there, guys, and I'll see you in the next one.